Hey, what's up, everyone? Welcome back to the channel. In today's podcast, we're diving deep into Bitcoin, the future of money. Whether you're a seasoned crypto enthusiast or just getting started, this episode is packed with everything you need to know about Bitcoin and its impact on the world. Here's what we'll cover in this episode. 1. The origin of Bitcoin, Satoshi Nakamoto's vision. Let's uncover the mysterious beginnings of Bitcoin and explore Satoshi Nakamoto's groundbreaking vision. 2. How Bitcoin works, the technology behind blockchain. Ready to dive deep into the world of blockchain? Let's break down the technology behind Bitcoin, mining, and how transactions get verified. 3. Bitcoin versus traditional finance, a game changer or a bubble. Is Bitcoin a revolution or just another bubble? Let's compare it with traditional finance and discover the truth. 4. The roller coaster of Bitcoin prices. What drives its volatility? Why does Bitcoin's price swing like a roller coaster? Let's explore the factors that drive its wild volatility. 5. Bitcoin adoption, the journey to mainstream acceptance. How is Bitcoin moving from the shadows to mainstream? Join us as we trace its path towards broader adoption. 6. The dark side of Bitcoin, myths and realities. Is Bitcoin as shady as they say? Let's bust the myths and face the realities about this crypto giant. 7. Bitcoin halving events. What do they mean for the market? Ever heard of Bitcoin halving? Let's explore what it means and how it affects Bitcoin's price and scarcity. 8. Bitcoin and regulation, friend or foe. Is regulation helping or hurting Bitcoin's growth? Join us as we dive into government attitudes and their impact on the crypto world. 9. Bitcoin as digital gold. Is it a store of value? Can Bitcoin replace gold? Let's debate its potential as a store of value and long-term investment. 10. Investing in Bitcoin. Tips, risks, and strategies. Thinking about investing in Bitcoin? Let's cover everything from tips and risks to strategies for navigating this exciting market. 11. The future of Bitcoin. Predictions for the next decade. What does the future hold for Bitcoin? Let's speculate on how it could shape the global economy and financial systems in the next decade. 12. Bitcoin mining, energy debate, and sustainability challenges. The energy debate surrounding Bitcoin mining is real. Let's explore the environmental concerns and the solutions for a sustainable future. 13. Bitcoin versus altcoins. What sets Bitcoin apart? Bitcoin or altcoins? Let's compare them and uncover what makes Bitcoin stand out from the crowd. 14. Real-life stories. How Bitcoin changed lives. Bitcoin has impacted lives in surprising ways. Tune in for real-life stories of how people and businesses have benefited from Bitcoin. 15. Bitcoin security, protecting your assets. How do you keep your Bitcoin safe? Let's dive into the best practices for protecting your digital assets and avoiding scams. By the end of this podcast, you'll have a clearer understanding of Bitcoin's journey, its pros and cons, and where it's headed. If you're excited about exploring the world of Bitcoin, don't forget to like this video, share it with your friends, and subscribe for more awesome crypto content. Let's get into it. The origin of Bitcoin, Satoshi Nakamoto's vision. Let's dive into one of the most intriguing stories of modern times, the creation of Bitcoin and the mysterious figure behind it, Satoshi Nakamoto. Back in 2008, during a global financial crisis that shook trust in traditional banking systems, a paper appeared online titled Bitcoin, a peer-to-peer electronic cash system. This wasn't just any paper. It was the blueprint for a revolutionary form of money. Its creator? Someone, or maybe even a group, called Satoshi Nakamoto. To this day, no one knows who or what Satoshi really is. It could be an individual, a team, or even an alias for a larger entity. So, what did Satoshi envision? In simple terms, a world where money wasn't controlled by banks or governments. Bitcoin was designed to be digital, decentralized, and transparent, meaning no single person or institution could manipulate or control it. Transactions would be verified by a network of computers, not middlemen. This idea challenged centuries of how we've thought about money. Here's the cool part. The technology that powers Bitcoin is called blockchain. Picture this, a giant unchangeable ledger that records every transaction ever made. But instead of being stored in one place, it's shared across thousands of computers worldwide. This makes it nearly impossible to hack or tamper with. When Bitcoin officially launched in 2009, it wasn't worth much. In fact, the first ever Bitcoin transaction was used to buy 2 pizzas for 10,000 Bitcoins. Today, that's worth millions of dollars. Talk about expensive toppings. But over time, Bitcoin started gaining traction. It wasn't just seen as a new kind of money. It became a movement. For some, it was a way to break free from traditional financial systems. For others, it was an investment, a chance to be part of something cutting edge. The mystery around Satoshi Nakamoto only adds to the allure. After creating Bitcoin and contributing to its early development, Satoshi disappeared in 2010, leaving behind a legacy and a community of developers to carry the vision forward. Whoever Satoshi is, they hold an estimated 1 million Bitcoins, making them one of the wealthiest individuals in the world if they ever cashed out. To sum it up, Bitcoin wasn't just born out of technology. It was born out of the need for change, a response to broken systems and a vision for a future where people could control their own money. It's a story of innovation, rebellion, and a mystery that keeps the world guessing. And that's the origin of Bitcoin, a revolution that began with a single idea, but continues to shake the foundations of how we think about money today. How Bitcoin works, the technology behind blockchain. All right, let's break down how Bitcoin actually works. I know, it sounds complicated at first. Blockchain, mining, transactions, it's like stepping into a sci-fi movie. But trust me, by the end of this, you'll get it. Let's go. First, let's talk about blockchain, the core technology behind Bitcoin. Imagine a digital book, a massive one, where every page is a record of transactions. Now, this isn't a regular book sitting on one person's desk. Oh no, it's a shared book, duplicated across thousands of computers all over the world. Every time someone makes a Bitcoin transaction, it gets added to a page in the book. Once the page is full, it's locked up, sealed forever, and a new page starts. Each page is called a block, and all the blocks are connected like a chain. And there you have it, blockchain. But here's the genius part. This book isn't stored in one central place. It's decentralized, meaning no single person or authority controls it. Instead, everyone who's part of the Bitcoin network gets a copy of the book, which keeps everything transparent and secure. Now let's move on to transactions, how they work, and why they're so secure. Let's say Alice wants to send Bitcoin to Bob. When she initiates the transfer, the transaction doesn't go through instantly like swiping a credit card. Instead, it gets broadcasted to the Bitcoin network, where a group of computers, called nodes, verify it. These nodes check three things. 1. Does Alice actually have enough Bitcoin to send? 2. Is the transaction valid and hasn't been tampered with? 3. Is Alice authorized to send the Bitcoin thanks to her digital signature? Once the transaction checks out, it's bundled with other transactions and added to the latest block. But wait, it doesn't just happen magically. This is where mining comes in. Think of miners as digital accountants, solving complex math problems to seal up the block. Why? Because every time a block is added to the blockchain, miners get rewarded with Bitcoin. It's like a prize for doing the hard work. This process not only keeps the blockchain secure, but also creates new Bitcoins. Now, here's why mining is so important. It's what makes Bitcoin nearly impossible to hack. To change a single transaction in the blockchain, someone would have to rewrite all the blocks that came after it, and not just on one computer, but on every single copy of the blockchain around the world. It's like trying to rewrite history while everyone else is watching. Good luck with that. Finally, let's talk about the Bitcoin supply. Unlike traditional money, where governments can print more whenever they want, Bitcoin has a fixed limit. 21 million coins. That's it. This scarcity is what makes Bitcoin valuable, like digital gold. So, to sum it up, blockchain is the digital ledger that keeps everything transparent and secure. Transactions are verified by a network of computers to prevent fraud. Mining adds new blocks to the chain and rewards miners with Bitcoin. It's a system built on trustless technology, meaning you don't have to trust anyone because the system itself is designed to work. And that's the beauty of Bitcoin. It's not just money, it's a revolutionary way to think about trust, transparency, and ownership. So now you know how Bitcoin works. It's not magic, it's math, tech, and a little bit of genius. Bitcoin versus traditional finance, a game changer or a bubble? Let's dive into the big debate. Bitcoin versus traditional finance. Is Bitcoin really the future of money, or is it just an overhyped bubble waiting to pop? Let's break it down in a way that's easy to understand. First, let's talk about traditional finance. This is the system we've used for centuries. Banks, central authorities, and governments managing money. It's familiar, and for the most part, it works. You get a bank account, swipe a card, take out loans, or save for retirement. The system is centralized, meaning banks and financial institutions are in control. But here's the catch. This control also comes with problems. Banks can freeze your account or deny access. Governments can print more money, causing inflation. Transactions can take days, especially internationally, and come with high fees. Now, let's bring Bitcoin into the picture. Bitcoin was created as an alternative to this centralized system, a decentralized digital currency that gives power back to the people. Here are the advantages of Bitcoin over traditional finance. 1. Decentralization. No banks, no middlemen. Bitcoin operates on a global network of computers, meaning you have full control over your money. 2. Borderless transactions. Sending Bitcoin from the US to India? It takes minutes, not days, and often costs less than traditional wire transfers. 3. Transparency. Thanks to blockchain, every transaction is public and verified, reducing the chance of fraud. 4. Limited supply. Unlike fiat money, Bitcoin has a cap of 21 million coins. This scarcity makes it immune to inflation caused by overprinting. 5. Financial freedom. Anyone with an internet connection can use Bitcoin. No need for a bank account. This is especially important in regions where banking services are limited. Sounds like a dream, right? Well, hold on. Bitcoin isn't perfect. Let's talk about its limitations. Volatility. Bitcoin's price swings like a roller coaster. One day it's up 10%, the next it's down 20%. This makes it risky as a stable currency. Adoption issues. While Bitcoin is gaining traction, it's still not widely accepted for everyday transactions like groceries or bills. Energy consumption. Mining Bitcoin uses a massive amount of electricity, raising environmental concerns. No consumer protections. Lose your Bitcoin wallet password? Too bad. It's gone forever. There's no customer service to help you out. Regulation. Governments are still figuring out how to regulate Bitcoin, and future laws could impact its growth. Now, let's address the big question. Is Bitcoin a game changer or a bubble? The answer depends on how you see it. For supporters, Bitcoin is like digital gold, a revolutionary way to store and transfer value. For skeptics, it's a speculative asset, overhyped and too volatile to replace traditional money. Here's the reality. Bitcoin doesn't need to replace traditional finance to succeed. Instead, it's carving out its own space, offering an alternative for those who want more control, transparency, and freedom with their money. So, whether you see it as the future of finance or just an exciting experiment, Bitcoin is here to stay, for now at least. The real question is, are you ready to embrace the change, or are you sticking with the old school system? The roller coaster of Bitcoin prices. What drives its volatility? Let's talk about Bitcoin's wild ride, its crazy price swings that make headlines every other day. One day it's reaching record highs, and the next it's crashing hard. Why does this happen, and what does it mean for people investing in Bitcoin? Let's break it down. First off, why is Bitcoin so volatile? Unlike traditional assets like gold or stocks, Bitcoin is still a relatively new player. This means it doesn't have decades of stability or a solid foundation that people fully trust yet. Here are the main reasons for its roller coaster-like price movements. 1. Limited supply, high demand. Bitcoin has a fixed supply of 21 million coins. That's it. No one can print more. But demand keeps growing as more people and institutions want a piece of it. When demand shoots up, the price skyrockets. But if demand drops, the price crashes just as quickly. 2. Speculation and hype. A lot of Bitcoin's price action is driven by speculation. News of big companies buying Bitcoin or regulatory updates can spark massive buying frenzies or panicked sell-offs. Remember when Tesla bought Bitcoin and the price soared? And then Elon Musk tweeted about environmental concerns and it dropped? That's speculation in action. 3. Market size. Bitcoin's market is still relatively small compared to traditional financial markets. Now, this means even small changes in buying or selling can have a big impact on the price. Think of it like a small boat. A little wave can toss it around, unlike a huge ship that stays steady. 4. Lack of regulation. Bitcoin operates in a space where global regulations are unclear and constantly changing. A single government announcement, whether it's a ban or support, can send prices flying up or crashing down. For example, when China banned Bitcoin mining, the price tanked. But when the US signaled support for cryptocurrencies, it recovered. Our 5. Media influence. The media plays a huge role in Bitcoin's price. Positive headlines can create FOMO, fear of missing out, driving prices up as everyone rushes to buy. But negative news like hacks, scams, or regulatory crackdowns can lead to panic selling. 6. Whale movements. In Bitcoin, whales are individuals or institutions that hold a large amount of Bitcoin. When they buy or sell in bulk, it creates massive ripples in the market. Imagine a giant splashing into a small pool. It's going to cause waves. What does this mean for investors? If you're thinking of investing in Bitcoin, you need to know one thing. It's not for the faint of heart. The price can rise or fall by thousands of dollars in a single day. Here's how you can navigate this volatility. Don't invest more than you can afford to lose. Bitcoin is exciting, but it's also risky. Treat it as a high-risk, high-reward asset. Think long-term. Instead of panicking over daily price swings, focus on Bitcoin's potential over years, not days. Diversify. Don't put all your money in Bitcoin. Spread your investments across different assets to reduce risk. Why does Bitcoin's volatility matter? Bitcoin's price swings might seem like chaos, but they're also a sign of a growing market. As adoption increases and more people join the Bitcoin ecosystem, we might see its price stabilize in the future. But until then, volatility is just part of the game. So, whether you're watching Bitcoin from the sidelines or riding the roller coaster as an investor, one thing's for sure, Bitcoin is never boring. Its ups and downs keep the world talking, and its volatility is what makes it both thrilling and terrifying at the same time. Bitcoin adoption, the journey to mainstream acceptance. Let's talk about something exciting, Bitcoin's journey to becoming mainstream. From being an internet experiment to a global phenomenon, Bitcoin is slowly but surely finding its way into everyday life. But how far has it come, and what does the future hold? Let's break it down. The early days. A niche technology. When Bitcoin launched in 2009, it was mostly used by tech enthusiasts, cryptographers, and a handful of curious people. Back then, you couldn't do much with it. The first real-world transaction? 2 pizzas bought for 10,000 Bitcoin. Yeah, those pizzas would be worth millions today. For years, Bitcoin stayed niche, a tool for the tech-savvy, and unfortunately, a few bad actors. But things started to change as people realized Bitcoin's potential beyond just being a digital currency. Bitcoin in industries. Integration on the rise. Fast forward to today, and Bitcoin is being adopted by industries worldwide. Let's look at where it's making waves. 1. Retail and e-commerce. Companies like Overstock, Shopify, and even some Starbucks locations now accept Bitcoin. Big names like PayPal and Cash App let users buy, sell, and hold Bitcoin, making it easier for people to use in daily life. 2. Finance and banking. Major financial institutions like JP Morgan and Fidelity are investing in Bitcoin or offering crypto services to their clients. Bitcoin ATMs are popping up in cities, allowing people to buy and sell Bitcoin like cash. 3. Real estate. You can now buy houses with Bitcoin. Companies are starting to accept Bitcoin as payment for properties, making it a legitimate option for high-value transactions. 4. Gaming and entertainment. Video game platforms, streaming services, and even online casinos are jumping on the Bitcoin train, letting users pay and earn in Bitcoin. 5. Cross-border payments. Bitcoin is revolutionizing international transactions. Traditional methods can take days and come with high fees, but Bitcoin transfers are faster, cheaper, and borderless. 6. Developing countries. In places where traditional banking is unreliable or inaccessible, Bitcoin is a game changer. Countries like El Salvador have even made it legal tender, allowing citizens to use Bitcoin just like regular money. The challenges to mainstream adoption. While Bitcoin is making progress, it's not all smooth sailing. Here are some hurdles. Volatility. Bitcoin's price fluctuations make it hard to use as a stable currency. Complexity. For the average person, using Bitcoin can still feel intimidating or confusing. Regulation. Governments around the world are figuring out how to regulate Bitcoin, and new laws could slow adoption. Energy concerns. Bitcoin mining's environmental impact remains a hot topic, pushing for greener solutions. the future of Bitcoin in everyday transactions. So, what's next? Bitcoin is unlikely to replace traditional money entirely, but it could complement it. Imagine a future where you buy coffee with Bitcoin at your favorite cafe, use Bitcoin to send money to family abroad instantly, save Bitcoin as a hedge against inflation, just like digital gold. As technology improves and people get more comfortable with crypto, Bitcoin could become as normal as using a credit card or cash. Why this journey matters. Bitcoin's journey to mainstream acceptance isn't just about money. It's about reshaping how we think about ownership, freedom, and access. It's giving people more control over their finances and offering new opportunities, especially in underserved communities. So, is Bitcoin ready for everyday use? Not quite yet, but it's getting there faster than most of us expected. The journey is far from over, but one thing's for sure. Bitcoin is no longer just a fad. It's becoming a real part of our world. And the dark side of Bitcoin, myths and realities. All right, let's address the elephant in the room. Bitcoin isn't all sunshine and rainbows. While it's revolutionary in many ways, it's also surrounded by controversy. From environmental concerns to illegal activities, Bitcoin has a dark side. But how much of it is fact and how much is just myth? Let's break it down. Myth 1. Bitcoin is only used for illegal activities. One of the most common criticisms of Bitcoin is that it's mainly used by criminals for things like money laundering, buying illegal goods, and funding cybercrimes. Sounds scary, right? But let's look at the facts. Yes, Bitcoin was famously used on dark web platforms like Silk Road in the early days. But today, illegal activities account for less than 1% of Bitcoin transactions. Compare that to cash, which is still the most used currency for crime because it's untraceable. The truth is, Bitcoin transactions are recorded on a public blockchain, making them more traceable than cash. Law enforcement has even used blockchain to track down criminals. So is Bitcoin used for illegal activities? Sometimes. But it's not the criminal haven some people make it out to be. Myth 2. Bitcoin is an environmental disaster. This is a big one. Critics often say Bitcoin mining consumes a massive amount of electricity, harming the environment. And yes, Bitcoin mining does use a lot of energy. But here's the bigger picture. Renewable energy use. About 60% of Bitcoin mining already comes from renewable sources like wind, solar, and hydro. Comparison to other industries. The traditional banking system, gold mining, and even Christmas lights consume far more energy than Bitcoin. Push for green mining. Innovations like carbon-neutral mining and energy-efficient blockchain networks are gaining traction, reducing Bitcoin's carbon footprint over time. So, while Bitcoin's energy use is a valid concern, the narrative isn't as one-sided as it seems. Myth 3. Bitcoin is a Ponzi scheme or a bubble. Some critics claim Bitcoin is a Ponzi scheme where early adopters profit at the expense of latecomers. But here's the difference. A Ponzi scheme guarantees returns and relies on constant new investments to survive. Bitcoin, on the other hand, doesn't promise returns. It's an open, decentralized network where value is driven by demand. As for being a bubble, sure, Bitcoin's price is volatile, and it has seen bubbles burst in the past. But after every crash, Bitcoin has bounced back stronger, proving it's more than just a fad. Reality 1. Bitcoin's accessibility issues. Now, let's talk about a real problem. Bitcoin isn't easy for everyone to use. Setting up a wallet, securing your private keys, and understanding how transactions work can be overwhelming for beginners. This complexity slows down adoption, especially in regions where tech literacy is low. Reality 2. Regulatory uncertainty. Governments around the world are still figuring out how to regulate Bitcoin. Some see it as a threat to their financial systems, while others embrace it as innovation. This uncertainty creates fear, uncertainty, and doubt, often called FUD in the market, which can lead to sudden price drops. Reality 3. Security risks. While Bitcoin itself is secure, users can fall victim to scams, hacks, or losing their private keys. Once your Bitcoin is gone, it's gone forever. There's no central authority to help recover it. This highlights the need for better education and tools to make Bitcoin safer for everyday users. Why these criticisms matter. Criticism isn't a bad thing. It highlights areas where Bitcoin can improve. And to be fair, the Bitcoin community is working hard to address these issues. From energy-efficient mining to making wallets more user-friendly, Progress is being made. The bottom line, Bitcoin, like any revolutionary technology, has its pros and cons. Yes, it has a dark side, but many of the fears are based on myths or misunderstandings. The key is to stay informed, look at the facts, and understand the full picture. So, is Bitcoin perfect? No. But is it a scam or an environmental disaster? Not quite. It's a work in progress, and its future depends on how we address its challenges today. Bitcoin halving events. What do they mean for the market? Let's talk about one of Bitcoin's most fascinating features, halving events. If you've heard the term but don't really know what it means or why it's such a big deal, stick around. By the end of this, you'll know exactly why halving events are key to Bitcoin's price, scarcity, and long-term value. What is Bitcoin halving? First things first, what is halving? It's an event that happens roughly every 4 years when the amount of Bitcoin miners earn for verifying transactions is cut in half. Let me simplify this. Miners are like Bitcoin's accountants. They use powerful computers to solve complex puzzles, and in return, they get rewarded with Bitcoin. When Bitcoin first launched in 2009, miners earned 50 Bitcoin per block. A block is a group of transactions. Every 210,000 blocks, or about every 4 years, the reward gets cut in half. So after the first halving, miners earned 25 Bitcoin per block, then 12.5, then 6.25. This process will continue until all 21 million Bitcoin are mined, likely around the year 2140. Why is halving so important? Halving events are designed to make Bitcoin scarce, like digital gold. Think about it. If miners earn less Bitcoin, there's less new Bitcoin entering the market. This reduced supply creates scarcity, which can increase demand and ultimately drive up the price. It's basic economics. When something becomes harder to get, its value often goes up. How does halving impact Bitcoin's price? Now, here's where things get interesting. Let's look at what happened after previous halving events. 1. 2012 halving. After the first halving, Bitcoin's price skyrocketed from around $12 to over $1,000 within a year. 2. 2016 halving. The second halving pushed Bitcoin's price from $650 to nearly $20,000 by the end of 2017. 3. 2020 halving. After the most recent halving, Bitcoin's price surged from $8,000 to an all-time high of over $60,000 in 2021. These patterns show a clear trend. Halving events often lead to massive price increases. But here's the catch. It doesn't happen overnight. The price surge usually starts months or even years after the halving, as the market adjusts to the reduced supply. What does halving mean for miners? Halving is a double-edged sword for miners. On one hand, they earn less Bitcoin for their efforts. But if the price of Bitcoin rises significantly, their earnings can still increase in dollar terms. However, for miners with high operating costs, halvings can make mining less profitable, forcing some to shut down. The big picture, scarcity and long-term value. Bitcoin halving events are more than just technical milestones. They're central to what makes Bitcoin unique. They ensure that Bitcoin remains scarce, which helps protect its value over time. Think of it like gold. There's only so much in the ground, and as it becomes harder to mine, its value tends to go up. Are there any risks? Of course. Halving isn't without risks. Reduced mining rewards could lead to fewer miners, which might make the network less secure. However, Bitcoin has proven resilient through multiple halvings, and the network continues to grow stronger. Bitcoin and regulation. Friend or foe? All right, let's dive into one of the most controversial topics surrounding Bitcoin, regulation. Is it Bitcoin's best friend or its worst enemy? We're going to break down how governments around the world are handling Bitcoin and how it's impacting its growth. Trust me, this is something you definitely want to understand. What's the deal with Bitcoin and regulation? Bitcoin operates in a decentralized world, meaning no one government or organization controls it. But that doesn't mean governments are ignoring it. In fact, they're scrambling to figure out how to deal with Bitcoin and other cryptocurrencies. Governments regulate traditional money, your dollar or euro, because they want to control inflation, ensure economic stability, and protect consumers. But Bitcoin is different. Its value can change rapidly, and it can be used across borders, making it difficult for governments to control or tax. So, regulators around the world are taking different approaches to either embrace or fight against Bitcoin. The friendliest governments. Who's embracing Bitcoin? Some countries see Bitcoin as an opportunity for innovation, financial freedom, and economic growth. Here's how they're reacting. El Salvador made headlines in 2021 when it became the first country to adopt Bitcoin as legal tender, meaning Bitcoin is now officially recognized as money alongside the US dollar. This move has sparked global conversations about whether other countries might follow suit. Switzerland is another standout. It's been friendly to cryptocurrencies for years, with cities like Zug, known as Crypto Valley, offering a crypto-friendly environment for businesses and individuals. Singapore and Malta are also quite open to crypto, offering clear regulations that make it easier for businesses to operate within the crypto space. These countries see Bitcoin as a way to boost innovation, attract investment, and reduce reliance on traditional financial systems. For them, regulation isn't about shutting Bitcoin down. It's about providing a framework to keep things secure and stable. The not-so-friendly governments. Who's cracking down? On the other hand, many governments aren't so welcoming. They're worried about Bitcoin's volatility, its potential for illegal use, and how it might undermine their national currencies. Here's how some are reacting. China has been the most aggressive in its crackdown. They banned Bitcoin mining in 2021, which led to a massive drop in mining activity in the country. The government's main concern? Bitcoin's potential to destabilize their financial system and the environment impact of mining. India has had an on-again, off-again relationship with Bitcoin. While there have been discussions about a potential ban, there's also talk of taxing crypto in the future. The uncertainty is a big issue for investors. Russia has taken a mixed approach. Officially, it doesn't allow Bitcoin as legal tender, but the government has been exploring regulations that would allow crypto trading under controlled conditions. The middle ground, countries on the fence. Then we have countries that are still figuring it out. They haven't fully embraced Bitcoin, but they're not outright banning it either. For example, the United States has had mixed reactions at the federal and state levels. Some states like Wyoming and Texas are very pro-Bitcoin, while others like New York are tightening regulations on crypto businesses. The IRS has already started taxing Bitcoin gains as property, and more rules could be coming soon. The European Union is taking a cautious approach too. The EU has proposed regulations to standardize the rules for crypto across its member states. This could help provide more clarity, but also come with tighter controls. What does all this mean for Bitcoin's growth? The big question, how does all of this regulation impact Bitcoin's future? Well, here's the thing. Clear regulations can help growth. In places like Switzerland or Singapore, clear rules actually help the crypto industry grow. People are more likely to invest when they know the rules of the game. Too much regulation could stifle innovation. But too much regulation, especially in countries like China or India, could push Bitcoin businesses elsewhere and slow down innovation. Global uncertainty creates risk. The uncertainty around how Bitcoin will be regulated globally makes the market unstable. For instance, if one country suddenly bans Bitcoin, it could send the price plummeting, even if other countries continue to adopt it. What about the future? As Bitcoin becomes more popular and more people start using it, governments will have no choice but to figure out how to regulate it in ways that balance innovation with security. In the future, we could see more countries like El Salvador fully embracing Bitcoin, or we could see tighter regulations that restrict its growth. Bitcoin as digital gold, is it a store of value? All right, let's dive into a hot topic in the world of finance. Bitcoin as digital gold. Can Bitcoin replace traditional assets like gold as a long-term store of value, or is it just a shiny new asset that's too volatile to trust? Let's break it down and see if Bitcoin really has what it takes to be the digital gold of the future. What does store of value mean? Before we dive into Bitcoin, let's quickly explain what we mean by store of value. In simple terms, a store of value is an asset that maintains its value over time and can be used to preserve wealth. The classic example? Gold. For centuries, gold has been a reliable store of value. When the dollar or other currencies lose value due to inflation, gold usually holds its ground. But the question is, can Bitcoin do the same? Shash, Bitcoin's case as digital gold. Let's look at why some people believe Bitcoin could be the digital version of gold. 1. Scarcity. Just like gold, there's only a limited amount of Bitcoin. There will only ever be 21 million Bitcoin in existence. This fixed supply makes Bitcoin inherently scarce, which, in theory, can help it retain value over time. 2. Decentralization. Bitcoin operates on a decentralized network, meaning no government or institution controls it. This is similar to gold, which has historically been valued because it's independent of any currency or central authority. 3. Hedge against inflation. Many people buy gold as a hedge against inflation, and Bitcoin is being seen by some as a modern alternative. When traditional currencies lose value due to inflation, Bitcoin has the potential to hold its value or even increase in price, just like gold has done during times of economic uncertainty. So, on paper, Bitcoin has a lot of the characteristics that make gold a good store of value. But it's not that simple. Let's talk about the challenges. The challenges. What makes Bitcoin different from gold? 1. Volatility. This is the big one. Gold is relatively stable. Its price doesn't swing wildly from day to day. But Bitcoin? Well, its price can go up or down by thousands of dollars in a single day. This extreme volatility makes it risky for people who want a stable store of value. 2. Adoption. While Bitcoin is gaining popularity, gold is still the go-to for many investors. Central banks hold gold reserves as part of their monetary policy. Bitcoin hasn't yet reached that level of adoption or trust. Many people still see it as speculative or risky rather than a solid store of value. 3. Regulatory uncertainty. Bitcoin's future depends a lot on how governments decide to regulate it. If countries crack down on Bitcoin or ban it altogether, its value could plummet. Gold, on the other hand, has been around for thousands of years and has survived through countless economic changes and regulatory shifts. The case for Bitcoin as a long-term investment. Despite the challenges, Bitcoin is still being seen by many as a store of value for the future. Here's why. Bitcoin's digital nature. Unlike gold, Bitcoin can be easily stored, transferred, and divided in digital form. You don't need to worry about physical storage like vaults or safes, and you can send Bitcoin across the world instantly. Global appeal. Bitcoin's decentralized nature means it's not tied to any one country or currency. In times of global instability, Bitcoin could potentially serve as a neutral store of value. Increasing institutional interest. More and more institutional investors are jumping into Bitcoin, viewing it as a hedge against inflation and an alternative to traditional assets. If this trend continues, it could lead to wider adoption of Bitcoin as a store of value. Can Bitcoin truly replace gold? Now, can Bitcoin truly replace gold as a store of value? Well, the answer isn't clear-cut. Gold has been trusted for thousands of years, and it's likely to remain a safe haven for many investors in the near future. Bitcoin, on the other hand, is still relatively young and faces challenges like volatility and regulatory uncertainty. However, there's no denying that Bitcoin is carving out a space for itself in the world of finance. Whether it will ever replace gold entirely is uncertain, but it's definitely becoming a viable alternative for those who are willing to take on the risks for the potential rewards. So, can Bitcoin be the next gold? In some ways, yes. Its scarcity, decentralization, and hedge against inflation make it a potential store of value for the future. But its volatility and lack of long-term history make it a risky choice for those looking for stability. Bitcoin might not be the new gold just yet, but it's certainly on its way to becoming a digital alternative. Will it ever fully replace gold? Only time will tell. But for now, Bitcoin's role as a store of value is one to watch closely. Investing in Bitcoin, tips, risks, and strategies. All right, so you're thinking about jumping into the world of Bitcoin, but maybe you're feeling a little overwhelmed. Don't worry, I've got you covered. Today, we're going to break down some key tips, the risks involved, and the strategies you should know to navigate the Bitcoin market like a pro, whether you're a beginner or an experienced investor. Bitcoin basics. What you need to know. Before you start investing, it's important to understand what Bitcoin is and how it works. We've covered the basics in previous episodes, but here's a quick recap. Bitcoin is a decentralized digital currency that operates on a peer-to-peer network. It's not controlled by any bank or government, and transactions are recorded on the blockchain, making it secure and transparent. The price of Bitcoin is driven by supply and demand. There's a fixed supply of 21 million coins, and as demand increases, so does the price. But remember, Bitcoin's price is extremely volatile. It can jump up thousands of dollars in a day or drop just as fast. Tip 1. Start small. If you're new to Bitcoin, my first piece of advice is start small. Don't invest more than you're willing to lose. Bitcoin can be an incredible investment, but it's risky. So it's better to begin with a small amount, maybe 1 to 2% of your total portfolio. You can always increase your investment as you get more comfortable. Tip 2. Do your research. This might sound obvious, but it's worth repeating. Do your research. The Bitcoin market is full of hype and misinformation, so make sure you're getting your info from reliable sources. Look into things like how Bitcoin works, the risks involved, what's driving Bitcoin's price movements, the best platforms to buy and store Bitcoin securely. The more you understand, the better your chances of making smart investment decisions. Tip 3. Use dollar cost averaging, DCA. Dollar cost averaging is one of the most popular strategies for investing in Bitcoin, and for good reason. It's simple and effective. What is DCA? It means investing a fixed amount of money in Bitcoin at regular intervals, no matter the price. For example, you could buy $100 worth of Bitcoin every week or month. Why is this helpful? It helps you avoid trying to time the market, which is really hard to do. With DCA, you're buying Bitcoin at different prices, which lowers the impact of short-term price swings and reduces the risk of making a big mistake by buying at the wrong time. Tip 4. Diversify your portfolio. While Bitcoin is an exciting investment, don't put all your eggs in one basket. Diversifying is key to managing risk. Along with Bitcoin, you might want to consider investing in other cryptocurrencies, stocks, bonds, or traditional assets like real estate. This helps protect you from market volatility. Tip 5. Stay calm during market volatility. Bitcoin's price can swing wildly from day to day, and it's easy to get caught up in the excitement or panic. The most important thing is to stay calm. Don't let fear or greed drive your decisions. HODL is a popular term in the Bitcoin community, which means holding on to your Bitcoin for the long term, regardless of short-term price fluctuations. Remember, Bitcoin is a long-term investment. If you believe in its potential, try to ignore the day-to-day noise and focus on the bigger picture. The risks. What to watch out for. Before you jump in, let's talk about the risks involved with Bitcoin investing. 1. Volatility. We've mentioned this already, but it's worth repeating. Bitcoin's price can be extremely volatile. In one day, you could see your investment rise or fall by thousands of dollars. 2. Security risks. While the Bitcoin network itself is secure, if you don't store your Bitcoin properly, you could lose it. Using a secure wallet and backing up your keys is essential. Never leave your Bitcoin on exchanges for long periods, as they can be vulnerable to hacking. 3. Regulatory risks. Bitcoin's legal status is still unclear in some countries. Governments may introduce new regulations that impact its value or its ability to be used. Stay informed about the regulatory environment in your country. Tip 6. Know when to sell. Just as important as knowing when to buy is knowing when to sell. There's no magic formula for this, but a good rule of thumb is to set clear goals for your investment. Are you looking for short-term profits, or are you in it for the long haul? Take profits when you've reached your target. If Bitcoin's price skyrockets, don't be afraid to sell a portion of your holdings to lock in gains. Avoid getting caught up in FOMO, fear of missing out. Don't panic if the price drops or shoots up. Stay calm, stick to your plan, and don't make emotional decisions. Tip 7. Have a plan for the long term. Investing in Bitcoin is a marathon, not a sprint. Have a plan and stick to it. If you're in Bitcoin for the long term, resist the temptation to constantly check the price. Set it, forget it, and let your investment grow over time. So to sum it up, Bitcoin can be a great investment, but it's not without its risks. The key is to start small, do your research, and have a strategy in place. Use dollar cost averaging, diversify your portfolio, and stay calm through the ups and downs of the market. Bitcoin isn't a get-rich-quick scheme, but if you're patient and smart about your approach, it could be a powerful part of your investment strategy for years to come. The future of Bitcoin, predictions for the next decade. All right, let's talk about the future of Bitcoin. Where is it heading in the next decade? Will it become a mainstream financial tool, or will it fade into the background? In this episode, we're going to speculate on how Bitcoin could shape the global economy and financial systems over the next 10 years. It's a thrilling topic, so let's dive right in. Bitcoin's potential role in the global economy. Bitcoin is already having a major impact on the world of finance, but what could it look like in the next decade? Let's break it down. 1. A new global currency? One of the most exciting predictions is that Bitcoin could become a global currency, or at least a global reserve asset. Right now, Bitcoin isn't widely used as a daily payment method, but in 10 years, that could change. If Bitcoin continues to gain adoption, we might see it being used more regularly in transactions across borders. It could even challenge traditional currencies, like the US dollar or euro, as a preferred store of value or medium of exchange. Governments might also start adopting Bitcoin in some form, or countries could back their national currencies with Bitcoin as a reserve asset. Number 2, decentralized finance, DeFi, goes mainstream. Right now, DeFi is a hot trend in the crypto world. In the next decade, we could see decentralized finance platforms, powered by Bitcoin and other cryptocurrencies, becoming a mainstream alternative to traditional banking. These platforms allow people to lend, borrow, and trade without the need for middlemen like banks. As people lose trust in traditional financial institutions, Bitcoin and DeFi could provide a safer, more transparent way to manage money. The possibilities are endless. Number 3, Bitcoin as a hedge against inflation. Bitcoin's limited supply and decentralized nature make it an attractive hedge against inflation and economic instability. If traditional currencies continue to lose value due to inflation or poor economic management, more and more people could turn to Bitcoin as a store of value. This would solidify Bitcoin's role as a digital gold, a safe haven for wealth preservation in times of economic uncertainty. Bitcoin's impact on financial systems. Bitcoin could also have a huge impact on traditional financial systems. Here's how. 1. Disrupting the banking system. As more people adopt Bitcoin, traditional banks might need to adapt or risk becoming obsolete. Banks are already starting to experiment with blockchain technology, and Bitcoin could push them further in that direction. In the next decade, we might see Bitcoin being integrated into everyday banking systems, allowing customers to transfer funds instantly and at lower fees compared to traditional bank transfers. Bitcoin could challenge the dominance of banks and change how we think about money and financial services. 2. Bitcoin ETFs and institutional adoption. Institutional adoption is a big topic right now. More and more big players like hedge funds, banks, and publicly traded companies are getting into Bitcoin. Over the next decade, we could see Bitcoin ETFs, exchange-traded funds, become more common, allowing investors to gain exposure to Bitcoin without actually owning it. This could lead to even more institutional involvement, which could drive the price up and further legitimize Bitcoin in the eyes of the general public. Number 3. Improved regulation and security. One of the key factors holding Bitcoin back from mass adoption is regulation. Governments are still figuring out how to regulate Bitcoin, and security concerns are always a risk. But over the next decade, we're likely to see more clarity around Bitcoin's legal status and stronger security measures to protect users. As regulations become clearer, Bitcoin will become more appealing to institutional investors and individuals alike. We could also see more secure platforms and technologies to help keep Bitcoin safe from hackers. Challenges and roadblocks ahead. While the future of Bitcoin looks promising, there are also a few challenges we'll need to overcome. 1. Volatility. Bitcoin's price swings could be a barrier to wider adoption. If Bitcoin wants to become a global currency or store of value, it'll need to stabilize. While volatility is a part of Bitcoin's charm for some investors, it's not ideal for everyday transactions. Over the next decade, Bitcoin may need to smooth out those price swings to gain more trust from everyday users. Number 2. Regulatory hurdles. Governments are still figuring out how to regulate Bitcoin, and some countries are outright hostile toward it. If Bitcoin wants to go mainstream, we'll need more regulatory clarity. The path forward will require global cooperation and a clear framework for how Bitcoin will be treated by governments worldwide. Number 3. Environmental concerns. Bitcoin's energy consumption has been a major point of criticism. Mining Bitcoin requires a lot of electricity, and some argue that it's not sustainable for the long term. Over the next decade, we might see efforts to make Bitcoin mining more energy efficient, or we could see a shift toward renewable energy sources to power the network. The bottom line: Bitcoin's bright future. So where does Bitcoin go from here? Well, it's hard to predict exactly what the next decade will hold, but there's a strong possibility that Bitcoin will play a massive role in shaping the global economy and financial systems. From being a digital store of value to becoming a legitimate alternative to traditional financial systems, Bitcoin's potential is huge. Will Bitcoin be the global currency of the future, or will it remain a speculative asset? One thing's for sure, it's going to be an exciting ride. Whether you're a Bitcoin enthusiast or a skeptic, the next 10 years are going to be full of surprises. Bitcoin mining, energy debate, and sustainability challenges. Today, we're tackling one of the most talked about issues surrounding Bitcoin, its environmental impact. Specifically, we're diving into Bitcoin mining, how it works, and why it uses so much energy. But don't worry, we'll also explore some potential solutions to make it more sustainable. So let's get into it. What is Bitcoin mining? First off, let's quickly break down what Bitcoin mining is. Mining is the process by which new Bitcoin is created and transactions are verified on the blockchain. Miners use powerful computers to solve complex mathematical problems, and in return, they're rewarded with newly minted Bitcoin. The process is essential for securing the network and making sure every transaction is legitimate. But here's the kicker: mining requires a lot of energy. These computers are running 24/7, using huge amounts of electricity to do their job. And that's where the environmental concerns come in. The energy debate. Why is Bitcoin mining so energy intensive? Let's talk numbers. Bitcoin mining is often criticized for its high energy consumption. To put it in perspective, it's estimated that the Bitcoin network uses as much energy as some small countries. And since most of the energy comes from non-renewable sources like coal and natural gas, this has raised some serious environmental concerns. So, why does Bitcoin mining require so much energy? Well, the process of mining is designed to be resource intensive. The more computing power it takes to solve a problem, the harder it becomes to manipulate the system. This makes Bitcoin secure and decentralized, but it also means more power is required. As Bitcoin's popularity grows, so does the mining competition, and that means even more energy consumption. The environmental impact. The environmental concerns about Bitcoin mining are pretty clear. Mining operations consume vast amounts of electricity, and if that electricity comes from fossil fuels, it results in high carbon emissions. This contributes to climate change, which is one of the biggest challenges we face today. Critics argue that the environmental impact of Bitcoin could outweigh the benefits of decentralized finance. Some have even suggested that Bitcoin's energy consumption is unsustainable in the long run, especially as the world pushes for greener, more sustainable solutions. Potential solutions for a greener Bitcoin. Now, here's the good news. There are ways to address Bitcoin's energy problem. Let's look at some of the most promising solutions. 1. Switching to renewable energy. One of the biggest changes that could make Bitcoin mining more sustainable is the shift to renewable energy sources like solar, wind, and hydroelectric power. In fact, some Bitcoin miners are already doing this. By moving away from fossil fuels and using clean energy, the environmental impact of mining could be dramatically reduced. In places where there's abundant renewable energy, Bitcoin mining could actually help stabilize the power grid by acting as a demand response. Number 2, green mining initiatives. There are already some companies and mining farms that are focused on green mining, using renewable energy exclusively for their operations. For example, some miners are tapping into excess energy from renewable sources that would otherwise go to waste, like unused solar power or flared natural gas. These initiatives are helping make Bitcoin mining more eco-friendly and could be a model for the future. 3. Transitioning to proof of stake, POS. Another solution that's been proposed is proof of stake, POS, an alternative consensus mechanism to Bitcoin's current proof of work, POW system. POS requires significantly less energy because it doesn't rely on miners solving complex puzzles. Instead, it selects validators based on the number of coins they hold and are willing to stake as collateral. Ethereum, the second largest cryptocurrency, is already making the switch to POS, and some believe Bitcoin could follow suit in the future. Number 4, improving mining efficiency. As technology advances, mining equipment is becoming more energy efficient. Newer mining rigs consume less electricity while providing the same computational power. By adopting more efficient hardware, the overall energy consumption of Bitcoin mining could be reduced even if the network grows. The bigger picture: is Bitcoin's environmental impact justified? So the big question is Bitcoin's environmental impact justified? On one hand, Bitcoin mining does consume a lot of energy, and yes, it does contribute to carbon emissions. But on the other hand, Bitcoin's benefits, like decentralization, security, and financial freedom, could have a huge positive impact on the world. It's a trade-off. The key to a sustainable future for Bitcoin will be a combination of cleaner energy sources, better mining practices, and more efficient technology. As the world pushes for sustainability, the Bitcoin community has an opportunity to lead the way in finding eco-friendly solutions. Final thoughts. Bitcoin's energy debate is one of the most pressing challenges facing the cryptocurrency community today. But there's no doubt that Bitcoin has the potential to change the financial landscape for the better. With innovations in green energy and more sustainable mining practices, Bitcoin can continue to thrive without compromising the environment. Bitcoin versus altcoins. What sets Bitcoin apart? All right, let's dive into a hot topic today: Bitcoin versus altcoins. What makes Bitcoin so special, and how does it stack up against the many other cryptocurrencies out there? Is Bitcoin still the king of crypto, or are altcoins starting to take the lead? Let's break it all down. What are altcoins? First things first, altcoins. The term altcoin refers to any cryptocurrency that's not Bitcoin. So, we're talking about all the other cryptos like Ethereum, Litecoin, Ripple, XRP, Cardano, and thousands more. Altcoins are created to solve different problems or improve upon what Bitcoin does. Some are better suited for faster transactions, others focus on smart contracts, while some want to make a more environmentally friendly crypto. The Bitcoin Foundation. What makes Bitcoin unique? Now, what sets Bitcoin apart from all these altcoins? Why is Bitcoin still the most well-known and widely used cryptocurrency in the world? 1. The first of its kind. Bitcoin is the original cryptocurrency, the first decentralized digital currency created by Satoshi Nakamoto in 2008. Its reputation as the pioneer of the crypto world is a huge factor in its dominance. It introduced the world to the idea of a decentralized peer-to-peer financial system without relying on any government or central authority. 2. Proven security. Bitcoin's proof of work, POW, system has been battle-tested over the years and has proven to be incredibly secure. The Bitcoin blockchain has never been hacked, making it one of the safest places to store value. While altcoins may offer new features, Bitcoin's security has stood the test of time, which is a huge reason why it's still the most trusted cryptocurrency. 3. Limited supply. Bitcoin has a fixed supply of 21 million coins. That's it. No more will ever be created. This scarcity gives it value, making it a popular choice for investors looking for a store of value, similar to gold. Many people view Bitcoin as a hedge against inflation, as its supply is predictable and unchangeable. Number 4. Decentralized and trustless. Bitcoin operates without a central authority, meaning there's no bank, government, or corporation controlling it. Everything is verified by a decentralized network of miners and nodes. This trustless system ensures that no one can manipulate the currency or reverse transactions. Other altcoins may claim decentralization, but Bitcoin's track record is what sets it apart. Altcoins, the contenders. While Bitcoin is the leader, many altcoins are carving out their own niches and providing solutions that Bitcoin doesn't offer, or can't, at least not yet. 1. Ethereum and smart contracts. Ethereum is one of the most popular altcoins, and it's known for enabling smart contracts. Smart contracts are self-executing contracts with the terms of the agreement directly written into code. Ethereum is much more than a cryptocurrency. It's a platform for building decentralized applications, dApps. Many people see Ethereum as the blockchain for building the decentralized internet, something Bitcoin can't do. Number 2, Litecoin, the silver to Bitcoin's gold. Litecoin is often referred to as Bitcoin Silver. It's based on Bitcoin's code, but offers faster transaction speeds and a different hashing algorithm. While Bitcoin transactions can take several minutes or longer, Litecoin transactions are usually much quicker. It's also cheaper to mine, making it attractive for smaller miners. 3. Ripple, XRP, focused on payments. Ripple is a centralized cryptocurrency that focuses on cross-border payments. It's designed to allow instant, low-cost international transfers. Unlike Bitcoin, which uses a proof-of-work mechanism, Ripple uses a unique consensus algorithm that makes it much faster and more scalable. Ripple is focused more on working with banks and financial institutions to improve payment systems, while Bitcoin is about disrupting traditional finance altogether. 4. Other niche altcoins. There are thousands of altcoins out there, and many of them have unique use cases. For example, Cardano focuses on scalability and sustainability, while Polkadot aims to enable interoperability between different blockchains. There are coins like Monero, which focuses on privacy, and Chainlink, which connects real-world data to blockchains through oracles. Bitcoin's role in the crypto ecosystem. While altcoins may offer unique features or faster transaction speeds, Bitcoin is still the gold standard in the world of cryptocurrencies. It remains the most widely recognized and accepted cryptocurrency, and most altcoins are built on top of Bitcoin's original principles. Bitcoin is often seen as a safe haven for investors looking for stability and long-term value. While altcoins may present opportunities for higher rewards and higher risks, Bitcoin offers a tried-and-true store of value and a global hedge against financial instability. The bottom line: Bitcoin's future in a sea of altcoins. Bitcoin remains king of the crypto world, but that doesn't mean it's the best solution for every use case. Altcoins are continuously innovating and finding ways to improve on what Bitcoin started. But when it comes to security, trust, and scarcity, Bitcoin is still the go-to cryptocurrency for investors and the digital gold of the crypto space. That said, the future is exciting. We'll likely see Bitcoin continue to dominate, while altcoins will continue to innovate and address the evolving needs of the crypto community. The two can coexist, each serving its unique role in the broader crypto ecosystem. We're diving into some real-life stories that showcase how Bitcoin has truly changed lives, whether it's giving people financial freedom, transforming businesses, or even offering a lifeline in tough times. These stories are a powerful reminder of just how impactful Bitcoin can be in people's everyday lives. So let's jump right in. Story 1. A refugee's new beginning. Let's start with the story of Omar, a refugee from Syria who found new hope through Bitcoin. As a refugee, Omar struggled to send money back to his family. Traditional banking systems were either too slow or unavailable, and Western Union fees were sky high. But when he learned about Bitcoin, things started to change. With Bitcoin, Omar could send money quickly and cheaply directly to his family without needing to go through expensive and unreliable intermediaries. His family was able to use the funds in their local currency, and Omar didn't have to worry about hidden fees or delays. Bitcoin gave him the ability to transact globally without the need for traditional banking, making it a game changer for his personal financial freedom. Story 2. A business transformation with Bitcoin. Next up, let's talk about how Bitcoin has transformed businesses. Alice, a small business owner in the US, was struggling with the fees and delays that came with accepting payments through credit cards and PayPal. Every time a customer made a payment, she'd lose a portion of it to processing fees. Plus, the delays in international payments were costing her valuable time. But when she started accepting Bitcoin, everything changed. No more middlemen. Bitcoin payments were fast, with almost no fees, and her customers loved the privacy and security of using Bitcoin. This simple change gave her business a competitive edge, and soon other companies in her area started to follow suit. By accepting Bitcoin, Alice not only saved money, but also opened her doors to a whole new market of customers who preferred using cryptocurrency. Story 3. Bitcoin as a hedge against hyperinflation. Let's move on to Carlos from Venezuela. Carlos lived through one of the world's worst cases of hyperinflation, where the Venezuelan bolivar, the local currency, was losing value rapidly, making everyday life a struggle. With inflation rates skyrocketing, his savings became almost worthless. That's when Carlos discovered Bitcoin. By converting his savings into Bitcoin, Carlos managed to protect his wealth from the crumbling national currency. Bitcoin allowed him to store value and transact without worrying about his money losing value overnight. He even used Bitcoin to buy goods from international suppliers, something that would have been impossible with local banks or credit cards. In a country where trust in the financial system was fading, Bitcoin became a lifeline for Carlos and many others who were looking for a stable alternative. Story 4. A small startup's big break. Now let's take a look at John, a tech entrepreneur who was working on launching a new startup. John was facing significant challenges in raising capital. Traditional investors and venture capitalists were hesitant to back a project like his, and crowdfunding platforms weren't giving him the traction he needed. That's when he turned to Bitcoin. John decided to run a Bitcoin-based crowdfunding campaign. The response was incredible. People from all over the world were excited about the idea and jumped in to support him, contributing Bitcoin directly to his project. The fact that he didn't have to deal with intermediaries and his funds were available instantly helped him get the project off the ground faster than ever. Bitcoin not only helped him raise the capital he needed, but also gave him a global customer base. His startup became a success, all thanks to the power of Bitcoin. Story 5. Bitcoin as a source of passive income. Finally, we have Mike, who saw an opportunity in Bitcoin mining. Mike wasn't your typical investor. He didn't have a ton of money to put into traditional stocks or bonds, but he did have access to cheap electricity. So he decided to invest in Bitcoin mining hardware. Over time, his mining operation grew. The more he mined, the more Bitcoin he earned. Eventually, he started to use his profits to invest in more mining equipment and scale his business. Mike's story shows how Bitcoin can offer people with limited resources the opportunity to create passive income and build wealth through mining, all while participating in the growing crypto economy. The bottom line: Bitcoin's life-changing potential. These stories show just how powerful Bitcoin can be for individuals and businesses alike. Whether it's enabling financial freedom for refugees, providing a hedge against inflation, transforming small businesses, or giving entrepreneurs a new way to fund their projects, Bitcoin is making a real impact. But the most amazing part? These are just a few examples. All around the world, people are discovering how Bitcoin can solve problems that traditional systems simply can't. The beauty of Bitcoin lies in its ability to give power back to the people, enabling them to take control of their finances, regardless of where they are or what challenges they face. Bitcoin security, protecting your assets. With more and more people getting into Bitcoin, protecting your digital assets has never been more crucial. Bitcoin is a powerful tool, but if you don't take the right steps to protect it, you could lose everything. So let's break down the best practices for keeping your Bitcoin safe and avoiding common scams. Why is Bitcoin security so important? First, let's talk about why Bitcoin security is such a big deal. Unlike traditional banks, Bitcoin is decentralized, meaning there's no bank or institution that can help you recover your funds if something goes wrong. If you lose access to your Bitcoin wallet or someone steals your keys, there's no way to get your Bitcoin back. So, securing your private keys, that's the key to your Bitcoin, is absolutely essential. Best practices for protecting your Bitcoin. 1. Use a secure wallet. The first step in securing your Bitcoin is choosing the right wallet. There are different types of wallets: hot wallets and cold wallets. Hot wallets. These are online wallets that are connected to the internet. They're easier to use, but are also more vulnerable to hacks. Popular hot wallets include mobile apps or software wallets on your computer. Only use trusted wallets like Exodus, Electrum, or Coinbase for your day-to-day transactions. Cold wallets. These are offline wallets like hardware wallets, e.g. Ledger, Trezor, or paper wallets, which are much safer from hacking. Cold wallets are the best option for long-term storage because they're not connected to the internet, so hackers can't access them. 2. Back up your private keys. When you set up your Bitcoin wallet, you're given a private key, a long, complex string of letters and numbers. This is what allows you to access and control your Bitcoin. If you lose your private key, you lose access to your funds forever, no questions asked. So back up your private key in a secure place, like writing it down on paper and storing it in a safe. A seed phrase, a set of 12 or 24 words, is another way to back up your wallet. This phrase can regenerate your wallet, so make sure it's stored somewhere safe, not on your phone or computer, because if they get hacked, your seed phrase could be compromised. 3. Enable two-factor authentication, 2FA. For all your Bitcoin-related accounts, including exchanges and wallets, enable two-factor authentication, 2FA. This is a simple extra layer of security that requires you to confirm your identity through something you know, like a password, and something you have, like a phone with a verification code. This makes it much harder for hackers to gain access to your accounts, even if they know your password. #Tomer4. Avoid phishing scams. Phishing scams are one of the most common ways people get tricked into giving away their private information. Phishing attacks usually come in the form of fake emails, texts, or websites that look like legitimate Bitcoin exchanges or wallets. The goal? To trick you into entering your wallet credentials or private keys so hackers can steal your Bitcoin. To avoid phishing, always double-check website URLs before entering sensitive information. Don't click on links from unfamiliar emails or texts. If something feels off or too good to be true, it probably is. 5. Be careful with public Wi-Fi. When accessing your Bitcoin wallet or making transactions, avoid using public Wi-Fi networks, like those in cafes or airports. Public Wi-Fi is an easy target for hackers who can intercept your data. If you must use public Wi-Fi, consider using a VPN, virtual private network, to encrypt your internet connection and protect your data from prying eyes. 6. Keep your software up to date. Just like with any other technology, it's important to keep your Bitcoin wallet and any related software up to date. Developers constantly release security updates to patch vulnerabilities. If you don't update your wallet software or apps, you could be leaving yourself open to attacks. Make sure you're always using the latest version to stay safe. 7. Be wary of Bitcoin investment scams. There are many Bitcoin investment scams out there that promise huge returns in a short period of time. These scams can appear as social media posts, websites, or even pop-up ads that try to trick you into sending Bitcoin to fraudsters. Never invest in something that seems too good to be true. Do your research, check for reviews, and verify that the platform or investment opportunity is legitimate before committing. Always remember, if it sounds too good to be true, it probably is. 8. Use multi-signature wallets for extra security. If you hold a significant amount of Bitcoin, consider using a multi-signature wallet. This type of wallet requires more than one private key to authorize a transaction, meaning you need multiple parties to sign off before any Bitcoin can be sent. This adds a higher level of security and protects your Bitcoin from being stolen, even if one key is compromised. 9. Beware of fake Bitcoin support. Another common scam involves fake support teams claiming to help you recover lost Bitcoin or offer advice. Always remember, no one, not even official support teams, will ever ask for your private keys. Never give away sensitive information to someone claiming to be Bitcoin support. If you have issues, go directly to trusted, official sources. The bottom line, stay vigilant, stay safe. Bitcoin is amazing, but just like anything valuable, it requires attention and security. By following these best practices, you can protect your assets and avoid common scams. Remember, the most important thing is your private keys. Keep them safe, back them up, and don't share them with anyone. Enable 2FA, stay aware of phishing attempts, and always use a secure wallet. If you take these precautions, you'll be well on your way to safely enjoying all that Bitcoin has to offer. So, what are you doing to keep your Bitcoin secure? Let me know in the comments below. And if you found this video helpful, hit that like button, share it with your friends, and subscribe for more tips on Bitcoin and crypto security. Stay safe, and until next time.